Good evening, everyone. I hope you're all having a wonderful day. Thursday, going to be breaking down the E-mini futures contract per usual. This time around, we're going to start you guys off with the monthly time frame, go into the weekly time frame, look at the daily time frame, and then get into what occurred on our 30-minute intraday time frame, where I will give you guys destinations that we hit and update you guys on the destinations that we created today for the upside, as we had a trend day down. Pretty nasty day as far as what occurred. Could have been uh, could have been prevented had buyers held their own. They had an opportunity. Today was a crazy trend day down. Beautiful opportunity to short for anybody that was a seller. Hopefully, they made profit on the way down. And if you were trying to buy the market, trying to buy the dip, you definitely got hurt. And I guarantee you, there were a lot of people that were attempting to buy the dip because it's worked in the past, but you got to understand market context. You got to understand market generated information. And you can only get that with market profile and the 30-minute time frame. Those types of things will help you have somewhat of an edge on your basic everyday retail trader, and give you great opportunity to make money in this market. So without further ado, let's go ahead and get into it. So far, we are in a 4-month balance, right? I do have us marked at extreme monthly balance high and extreme monthly balance low. 3502 is the extreme low. 4327.50 is the extreme high. However, our 4-month balance is right here at 4208.50, uh, last month's high, and then December's low at 3788.50 is our balance low. That's what I'm calling it so far. So once we take out that low, I will say the monthly is firmly one time frame and down after that point. So far, after failing to get above that 4141 level and finding acceptance and moving up higher, uh, we've started to back off a pretty good bit on heading towards our balance low on the monthly. Let's go into our weekly. Once again, my mouse is broken, so you'll just have to bear with me. Uh, Weekly, firmly in a 3-week balance, even though we took out the previous week's high and the previous week's low. So we're potential to close with an outside week down, which is very bearish. Last time we had one of those was right here at that 4141 level. We popped up, sold off, and then we had 2 consecutive weeks of, sell pressure. Even though the second week in a row did not get much extension, but we did have follow through. So that is potentially, once again, here with an outside week down if we close tomorrow after the non-farm payrolls come out, potential to move lower. So, and test the 4-month balance low. We are in a balance though. However, uh, I almost want to say that we're going to be down if we close the weekly below this previous balance low. I will probably say the weekly's down, but right now we've just stretched the balance low down here too, because we did test the high and then roll over to the lows. So this week will probably be all of the balance, but the balance low will be 3909.50. So let's mark that real quick. 3909.50 is the balance low for now. All right. Now, tomorrow we close with pretty good extension to the downside. I will call the weekly down, but right now we're trading inside this channel, 40.8225, 239.0950. So far we've just stretched the balance low to the downside. One thing to note is on our weekly, right? We had this downward trend line, we broke out of it, and we're back testing it once again. 1 week, 2 week. This will be the 3rd week that we are back testing this downward trend. Do we get back inside and start setting up lower lows once again? Was this just another series of lower highs, right? On the larger time frame, right? Larger time frame, lower high, and then potentially setting in a lower low. That remains to be seen. We have to see some acceptance below the 200-day moving average And the catalyst for that can be the non-farm payrolls tomorrow, as for some reason algorithms and short-term traders enjoy looking at that number. Now let's go ahead and look at our daily time frame. Now yesterday I said we were in a balance, right? Today I'm saying we are one time frame down. I do not care. We are one time frame down with an outside day down. Very bearish. So I'm not stretching the balance. We took out at 39.7150 level pretty heavily to the downside. So I am saying we are one time framing down. All right, that's how I'm looking at it. We are one time framing down, even though we had an outside day down. We pushed up, back tested the 50-day moving average, did not like it, rolled back over as we could not find much acceptance above the previous day's high, and then we roll over, take out the previous day's low, and then see ya, just trended down all day long. Pretty heavy volume as well. We did above average volume. Average is about 1 million for the futures contracts. Today we did about 2 million on the futures contracts. So that is a hefty increase. That's what you want to see as far as a seller goes, right? You want to see volume pick up to the downside if you are a seller. Something we are doing, right? We are setting a series of lower highs in on the daily. Lower high, lower high, lower high, lower low, lower low. All right, becoming pretty bearish. Like I said, one thing you do not want to see is you don't want to see as a buyer to get back down into this cost basis down here where I'm about to highlight. You get back into this area, right? And you find acceptance in this area. There's nothing stopping you from taking out that previous monthly balance. And I believe, yep, right there, 37.8850. So basically, if you get back in that and you break below it, this market could really get some acceleration to the downside. So keep that in mind as we move forward in the coming days and into the next week. We closed below the 200-day moving average for the first time in a few days. Actually, for the first time in a few weeks, we're closing below the 200-day moving average. Now, 1 day doesn't make a market. 2 days doesn't make a market. We need to see if we find acceptance below the 200-day moving average. If we do, potential to move to the downside is good, as well as the odds favoring that. All right, now let's go ahead and look at our 30-minute time frame, and it was kind of a mean, nasty one, as we did nothing but trend lower all day long. Look at that. That was previous day's high yesterday was at 4,325. We pushed up to 40.1975. Didn't quite get to that afternoon rally high back on the 7th, right? We didn't get to that afternoon rally high. Backed off. Couldn't find acceptance above the previous day high. And then the buyers that got trapped up here began to give it up. And then sellers stepped on the pedal to get the overnight low. Once we got the overnight low, the next destination wasn't until the previous day's low. Let me go ahead and bring up all these destinations for you guys. And as you can see, I have them all marked on my chart because it is a key thing. You got to have these levels marked on your charts, or at least written down, so you understand the context of the market, right? So we took out the overnight low late in the day. Let me back up a little bit. Let's get personal here. Back it up just a hair. Sorry, I'm getting ahead of myself. Pretty exciting day. So we took out the previous day's high in A period. All right. We took it out, pushed up as anybody that was short down here began to get out of their positions, as well as the overnight sellers. They got out of their positions. We took out the overnight high, pushed up. Next destination on the upside was at 40.27 level. We did not quite get there as we just missed it by a couple points. And then we roll over. And then in B period, we have an inside bar, push down, couldn't get A's high, push down to the open, couldn't take out A's low, but back inside the previous day, we reject. C period, once again, inside bar, couldn't get either side of the IB. And then finally, we take it out in D period. after getting 4 wide at C's low, which is going to be a key proponent in identifying how this day was going to turn over uh, early on. It was kind of a key indicator, and I'll show you what I'm talking about. So let me highlight this area here. So point of control was right there. Make this yellow. That's not very yellow. Let's adjust that. Make it a more of a yellow, you know what I mean? And let's see. Just bear with me for a second. So we had point of control right there, and point of control is just the widest point in the time for, or in the on your 30-minute chart. Point of control was right there at C's high, right? Or at C's low. In D period, we began to take out C's low and start gunning below the open and take out B and A's low, which is the initial balance. So sellers start to pick up some things, start to check off some things on their checklist to get short. Now in E period, D had attempted to have single prints. We attempted to go trend. It was a very small set. E period pops up, cannot get back above the open, and cannot get to C's low where the point of control was at the time. And C's low was 4,350. So basically, could not get back above the previous day's high to get C's low, and that was a telltale sign that this market was pretty weak. And then once we couldn't do that, E rolls over, continues to one time frame down by taking out D's low. We have another set of single print attempts in E period. We fill it in F period, but not until after taking out E's low, getting really good extension to the downside. We push back up, fill that set of single prints. We were kind of thinking, all right, maybe they don't want to go trend. And then in G period, we pushed up, did not get much of a stop run, but now we've lowered point of control. We are now 4 wide down here at D's low, all right? Point of control moved from here at C's low. It then got moved down to D's low, all right? So now we got 4 wide. G pops, F's high, does not run many stops, showing that sellers are comfortable being short, and we have a potential for an afternoon rally high. Then we roll over, reversal bar, take out F's low, attempt to hold single prints again, H fills them, and then after that, we roll over, which was a great short opportunity for anybody that was late in getting short up here. Had a great opportunity to get short here to go get the overnight low, which was right around 79, and then take out the previous day's low. And sure enough, H period did that and then some as we took back the previous day's low. And the reason you want to mark single prints on your charts is because they become destinations to fill later in the trading cycle, right? As there was something to lean on during that day for the upside. Whenever we come back and revisit, they are targets and destinations for algorithms to fill because sellers will look to fill that area with supply where there was once demand. So it acts as a magnet. So we took out the previous day low. We had a small set of single prints at 71.25. 69.75 is where they filled. Did that, boom, filled them, no problem. And then in I period, strange enough, right? You can't make this stuff up. Thursday of last week, in I period, where change took place, we had that massive set of single prints that we needed to fill in with price and volume. I discussed that in yesterday's video, how if we did take out the previous day's low, we would look to fill this area with price and volume. And sure enough, we did that on Thursday of this week in I period by taking out H's low, getting into that set of single prints, and creating another set. So just showing you how emotional trading this market is. We create a triple distribution day down in I period, rolling over, right? Fills that set of single prints. And then from there on out, all you do is sell this market lower, creating another set of single prints in K, getting what I called an afternoon pullback low, but technically was not. It was a line in the sand, 42.25, where we had 2 poor lows at E and F, meaning supply shut off there. We came down, knocked that destination out, and then gunned it for the previous weekly balance low daily low 39.31 in L period, creating another set of single prints and just pushing this market lower. Once we took that out, there was no stopping this market. We had another set of single prints that needed to fill at 39.30. Filled that. Next destination was 39.12. And I'm sure people were thinking that this market was oversold and they were buying and buying and buying. And every time they pushed down lower, they were just getting stopped out, which caused more supply. Low of day 39.09. Pretty hectic on the sell side. Now, I did live trade today on YouTube for the first time, and you can go back and look that. I had a great sell position. I attempted to get long in F period, actually. Failed on that. And then I attempted to short in F period, got stopped out, but re-entered in G period once we took out F's high and did not get much extension. I was like, okay, odds of going back up to C's low is pretty low, as they had an opportunity to run stops, but sellers were comfortable. And as we came back into F's range, I got short at 96. This about 17 contracts. This market rolls over. We push down to 83. I get out a few contracts. We push even lower, and I exit my full position as we got to the overnight low. But however, I even stated in that live trading session that I would regret selling my position if we got the previous day's low and then continued lower. And that just goes to show you, when you have an opportunity to sell and there's nothing that told you to get out of the position from a market generated standpoint, market generated information never told me to get out of this trade, right? We never stopped one time frame and down. H period didn't stop it. I period did not stop it. J, K, L did not stop one time frame and down. I could have had a massive day, and don't get me wrong, I still got involved on the way down as I shorted in I period, I shorted in J period, and I shorted in K period. I did not get involved in L because I had pretty good, decent day, and I did not know how much further this market wanted to go, and I needed to get to the gym. But just goes to show you, when you're trading on a trend day and you have confirmation, this market can really get going. What's his name? I gotta think of the guy's name. Great quote by him. It'll hit me here in a second. What's his name? But basically, he says, what's his name? Oh, Tom Hogard. Hogard? Anyway, if you haven't read his book, Best Loser Wins, you should. But one of my favorite quotes is, be hopeful when I'm fearful, and then be fearful when I'm hopeful. I was being fearful of giving back profits in H period when we began trending down, so I exited my position. I should have been hopeful, right? Now, had this popped up in H and taken out G's high, and I began to add to my position because I was scared that I was wrong on the trade, I should have been fearful, right? Because then at that point I would have been hopeful. That's all that means, right? Is you should not limit yourself in situations where you have trend days down like this. But I still capitalized on the move, not as well as I should have, as I did have a pretty big position up here at 17 lot, probably the largest position I've held to this date. 17 lots is pretty big. We roll over and made pretty good on the day, and then continued to short in each time frame on pushes up. I shouldn't have exited my trades. I honestly should have just held, but you'd never know in this market. And once again, I'm fearful when I should be hopeful. So let's go ahead and mark our destinations. I know this is a long video. I appreciate anybody that does stick around, which I don't think anybody does. Don't think anybody actually sticks around to the end. But if you do, here are your destinations. Today's high, 1975. 1975. High day, 3. What a crazy trend day down, man. Opportunity after opportunity after opportunity. You cannot ask for a better day. This is when you make your heyday. A day like yesterday, you kind of want to stay out of, right? Chopping back and forth, you want to stay out of that. A day like today is where you make your money, man. It doesn't get any better than that. We have our textbook afternoon rally high in G period because we have set of single prints below. 97.75. Afternoon rally high. Textbook, by the way. Afternoon rally high. You know what? We're going to leave that solid because that is a pretty decent line in the sand there. And then we have our first set of single prints that start, or excuse me, because it's upside destination, it will fill here. So it's going to be a little backwards. But 81.50 is where the first set fills because it becomes upside destination. I know it sounds backwards and confusing. Hopefully you guys understand what I'm getting at. And I hope you guys are marking this on your chart, on your 30-minute chart. They start here at eyes high at 39.70. Great short opportunity there, right? 39.70. Crazy how an eye period is when we start to make change again. Single print start. 23. Next set of single prints start here at 39.66. Just bear with me, my mouse is not clicking. Or excuse me, single prints fill here. 3. And the reason I mark all the dates is so I know like the day that this happened. I can go back and reference and see what type of day it was. 75. And I might even go back and sim trade this just to kind of see what kind of capitalization I could have had. Single print start here. Then so you had your upper distributions, A's high to G's low, and then your lower your middle distribution is going to be J's high to J's low, where the next set of single prints will fill at 47.25. I'm absolutely impressed by anybody that sticks to the end. You are a trooper, and I hope you make tons of money. 23. And then the lower distribution starts at L's high, which is where the single prints start. 41.25. 41.25. Single prints start here. And then the bottom of the lower distribution is the day's low down here at 39.50, or excuse me, 09.50. 09.50. 39.09.50. Low day. So tomorrow, as a seller, if you open up in the lower distribution, you want to see us take out the low, right? And then continue to move lower, because then that will solidify the one-time framing down. On the daily, your next destinations are the low day from the January 19th at 39.0175. Then January 10th, low day 38.9725 is the next destination. And then you have single prints 38.88 or 38.85.50 from the 6th of January. They fill at 38.75 even. And then the next destination is the lowest accepted price down here at 38.42.50. For the upside, you have the top of the upper distribution, 39.41.25, where single prints start. They fill at 39.47.25. Then you start into the middle distribution at 39.47.25 up to 39.58.75, which is the upper end of the middle distribution. Single prints start there. They fill at 39.66. Next destination would be 39.70. 39.81.50 is where they fill, and then afternoon rally high of 39 97.75. You do not want to see us get back any of this day as a seller. So tomorrow, potential chop inside the lower to middle distribution until non-farm payroll if we do not open with a gap. Once again, thanks for stopping by, everyone. I hope you all have a wonderful day. If you made it to the end, you're a trooper, and I truly appreciate it. Please like, subscribe, and share this video. We'll catch you later.